I think we just feel that bond yields still have higher to rise in the US. I think we've got to get closer to 5% than 4% on the 10-year. And I wouldn't want to be buying the stock market until we've had, if you like, that final adjustment in bond yields. They're just still structurally too low. And that means that stock valuations, particularly tech stocks, anything with a kind of longer future income stream, have just got to come down a bit more.
But in terms of stock market valuations, and Giles, you're far better, a greater student of this than I am as well, but some of these yields now look rather extraordinary on historical comparisons as well. When I can pick up solid stocks for 6, 7% as well, that normally means that there's a mispricing going on.
Steve, I'm with you up to a point. I would definitely distinguish between what you're calling solid stocks and those that have still got, in my view, a kind of speculative element in them. I mean, if you look at what I mean by speculative stocks, okay, Meta down 70% this year, but they've been burning through cash on strategies which are destroying shareholder value. And I'm afraid that's been true of a number of those stocks that went so high during the boom. So I think we've still got the tail end of that shakeout to come.
Giles, I can see it's not just the US where you're watching policy action, but also the UK, and perhaps it'll be a better starting point to explain why you're still hawkish, because you're saying that you see rates are rising significantly above 3%. This is an economy where we can see growth very much challenged at this point. Why do you think there is room for the central bank to rise even further from here? Because I think if you're looking at central banks that are probably likely to go to a slower pathway than the US, the Bank of England might have been one of them.
Well, I think we have to say the Bank of England has obviously raised rates far less than the Fed this year, and that's made the pound very vulnerable. And of course, it's come down a long, long way. And while there's been all the focus on the budgetary problems, really, I think ultimately the fault here does lie at the door of the Bank of England. Of course, they have to be careful. They can't raise rates too fast, too far. But I think they have, I'm afraid, erred too much on the side of caution. And that has really made the pound fall as far as it has. And that has really given you the imported inflation, which has greatly exacerbated the picture here. So if we think the Fed is, let's say, moving to somewhere around 5%, the Bank of England can't just sit here and do nothing when the Fed adds that extra percentage point or so to rates. The bank has probably got to go at minimum half of that direction, perhaps more.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.